Very good evening, ladies and gentlemen. It is indeed a privilege and a moment of pride to welcome you all today for the media and the press brief of the CAL Holdings IPO. CAL started operations in the year 2000 and it has become what it is today, a name almost synonymous with investment banking in Sri Lanka. And what better way to start today's event than to hear from our chairman who has been with the company for over 2 decades on what our journey has been so far. So I hand it over to Dinesh to start off today's proceedings.
Thank you. Once again, a warm welcome to everybody and thank you for coming here today. 2 decades is a hugely long time, and for some of us who are in the audience who were there 2 decades ago, today is probably the most significant event in the history of CAL. I came here today with with the founder director, and it was quite a memorable trip because we left our current office, which has been our office for 20-something years. We took a route which made us pass through or pass by the place where he and I first met. And he didn't know this at the time, but I was questioning him as to which year that was. And it's amazing that time passes so quickly and things that start with just an idea come to fruition in such an amazing way. On your screens right now is the milestones or the historical journey of CAL. Within the first 6 years of we started as Capital Asia, and in the first 6 years we got a license to be a primary dealer. We started trading securities, and then obviously in the last 6 years, so 2019 to now, a few other serious milestones. We started our regional expansion. We listed one of the subsidiaries, and of course we're here today. CAL is, as you see, the largest non-bank primary dealer. It's the second largest stockbroker, and it's also the second largest asset manager. It's got more than 40,000 customers. It's got 800 million rupees of assets under management, and obviously you guys can read, so I don't need to read the rest of it, but it's an amazing journey with a few committed people at the beginning and an amazing team right now, a fantastic board of directors. And for me personally, it's been a fantastic journey, so I'm very happy to be here, and I'd like to hand it over to Kanishke to take you through the next set of slides.
Thank you. Thanks very much, Dinesh. And once again, thank you all for joining us today. So as Dinesh said, we've grown over 25 years, and we're proud to say today that across all the 4 sectors that we operate in Sri Lanka, we're the largest investment bank. We're also happy to be the fastest growing investment bank in Bangladesh, the second market that we operate in. But before I start talking about numbers and what we are doing, I think it's important to talk a little bit about who we are and what we stand for, because this is a key part of and we think about this every day at CAL when we come into work. So the whole thing, we are a purpose-driven organization. We come with a deep belief in capital markets and the ability of these to unlock wealth and prosperity to the societies that we live and work in through these capital markets. Wealth is created, capital exists in the economy, wealth is created by being able to deploy that capital where it's needed. And capital markets are like the pipes or the highways that take this capital from where it exists to where it's needed. And we believe our purpose is to help grow this, the capital markets in the economies that we operate in. And we've also chosen to operate in a set of frontier economies for multiple reasons. One, because this is where the greatest need exists. These are predominantly what we call quote-unquote poor countries with relatively less well-developed capital markets infrastructure, and the greatest need exists. it's also what we know best. We've grown up in Sri Lanka. We understand, this type of market environment, and we think we're good at, creating differential return there. So that's our purpose, and that's what we stand for. And we are also very values driven. We are very clear on what our values are, and we are very clear on what we stand for. And this is something that Ajit set this company up 25 years ago, and I think he's also been very clear about this right from the start. Number one is integrity, articulated as never selling to a client what you would not sell to your own family. I don't think it needs any more clarity, because that is, as clear as it gets. Number two is dynamism. You can call it innovation. It's never being happy with the status quo, always questioning what we do, and this is what creates so much of the innovation that we see Cal bringing to the table every day in terms of capital markets product creation. Then it's fairness. It's about the people. We are a people industry, of course, and it's fairness. It's about treating everybody well. We hire for attitude and we reward for performance. We don't care where you come from. It's about what you bring to the table. And finally, it's about teamwork. It's about institutionalizing capability. It's not about individual brilliance. It's about the collective genius that we are unlocking in our organization. So these four things, maybe it's not what you look at as a financial analyst, but it's important to talk about, I feel, at this kind of event, because this is what Cal is about. Then, we'll get into the business. So we've spoken about, what we do in Sri Lanka. We are touching nearly $3 billion of transactions every year. Nearly $3 billion of transactions flow through our different business value streams, and that's quite sizable for the type of market that we operate in. We manage over $800 million of assets. We are going, I think we'll close in on $1 billion this year. So that's also a certain level of scale. Again, that's quite good for the type of markets that we operate in. And I keep qualifying this, and that's what makes it so exciting, because for us, our market extends far beyond the shores of Sri Lanka. We've learned some really valuable lessons here. Sri Lanka is small, and our markets are small, and it's a small country, but our capital markets expertise and our history is long, and we have a lot of deep expertise in Sri Lanka relative to other frontier economies. And we are able to take the lessons that we've learned here, and we have found that it's internationally portable, internationally transferable, and scalable as a result. And that's what makes Cal a really interesting investment opportunity in my perspective, not in the next 6 months, but really over a 5-year, 7-year horizon. And that's what gets me excited as I come into work every day. So that's a big part of this IPO. A lot of the capital that we hope to raise in the IPO will be channeled towards global expansion. Really taking, we are a $100 billion economy in Sri Lanka, and we've grown to a reasonable size in this economy. But we see a GDP footprint that is 10x what is available in Sri Lanka. And that gives you a sense of that more than 10x growth that we can have as Cal by being able to establish ourselves in a much broader geographic footprint. So that, the next part of it, which is our 3 growth pillars. Again, very clear about how we are going to grow and what we want to grow in. So we're not going to be everything for everybody. We are very specific about what we do, but we're going to expand our market space. And we see expansion into other frontier markets as a key part of our growth strategy. The second part of it is retail. We operate in an industry that has historically serviced institutions and ultra high net worth individuals. And it's been an industry that historically has struggled to make its products available to ordinary citizens and retail investors. By using technology, we have been able to unlock a business model that allows us to bring really cutting edge investment banking solutions to retail investors. And I think that is a really exciting prospect. We now service 40,000 clients. And we do this, and a vast majority of this we do through a purely digital platform.
Excuse me. Sorry about that. Yeah, so we do it through a purely digital platform. And again, this is scalable both in Sri Lanka and it's globally scalable. So makes it a very exciting prospect. Finally, it's about product creation using our own balance sheet. CAL is in Sri Lanka unique for having a deep balance sheet for being in this sector of the industry. Yes, you have commercial banks in Sri Lanka that have very large balance sheets, but they tend to be very much in the borrowing and lending space. As an investment bank, we are able to be a lot more creative and a lot more innovative with the capital that we have. And we use that to create product and unlock the value in the capital markets. So you will be seeing a lot more innovation and a lot more product creation coming out of CAL. Again, as we deploy a part of the funds in this IPO into that product creation capability. So that's where that's how we are planning on using the funds. We are raising just under 1.6 billion rupees in this IPO. About half of that will be for our global expansion. Bulk of the rest will go towards the 375 and 300 that you see. Really, that's balance sheet augmentation and using our balance sheet to deliver, to drive revenue. And then the final 150 million is into technology. We haven't mentioned on this deck, but CAL has 200 people and about 40 of these people work in technology. They are in the tech space, either developers or development related work, and a lot of data analysts and a lot of data science that goes into this. So, and we will continue to invest heavily in that area. So just a little bit about our business verticals. We started our life, in the government security space. That remains a USP of CAL. I think we are the best in the business when it comes to understanding where interest rates are going and taking positions on it and helping our clients take the right positions on it. And we use that macro modeling capability to then drive value across all our businesses. We are in asset management. As I said, we are targeting to have $1 billion under management within this financial year. We do stock brokerage, equity trading, stock broking, again, asset management, stock broking, and corporate finance are all across both Sri Lanka and Bangladesh. We are the second largest stockbroker in Sri Lanka. We are one of the in the top 10% of stockbrokers in Bangladesh. We are the second largest in Sri Lanka. We're in the top 10% of stockbrokers in Bangladesh. We're also the fastest growing stockbroker and the only international stockbroker in Bangladesh. And finally is corporate finance and advisory. I think over the last 4 or 5 years, we've been responsible for maybe the largest number of IPOs that have come to the market in Sri Lanka. We have a very strong corporate finance and advisory team, and we've been offering this as a service since 2003. So it's something that we have a deep expertise in. And yeah, a lot of words here, but really I want to talk to you about what drives CAL's performance. And number one is data, it's insights, it's the differential value proposition, value that we are able to create for our clients. And at CAL, we consume, digest, and utilize data in a way that I think few other companies in Sri Lanka or Bangladesh do. And then data is a key part of what drives our strategy. Second is product innovation. So as I've spoken about, we have a lot of structuring capability within the organization, and we are constantly creating new types of financial products that help unlock value in the capital markets. And then technology. The retail platform that our clients see is one part of this technology. We also have homegrown systems, core systems that have been developed, proprietary systems developed by CAL. And these systems, again, are internationally transferable. We can use them across the globe. And these systems give us the flexibility to be more agile than other players
who are often relying on third-party systems that have often been developed in non-native markets. And then you're waiting for updates to happen in the frontier economies. Operating in economies like these, where rules change, policies change all the time, having our own systems that we have developed ourselves gives us a huge advantage. So I guess this is the key part of this whole IPO story, and something that we just wanted to put out there. We are in Sri Lanka and Bangladesh. We serve 200 million people, not 20 but 200 between Sri Lanka and Bangladesh. We are looking to enter Kenya, and Kenya as a gateway to East Africa, because Nairobi serves as a regional financial center for Uganda, Tanzania, Ethiopia, to an extent Rwanda, in addition to Kenya. But just taking Kenya alone, we will be, when we set up there, we will be covering 250 million people, and a cumulative GDP of about $650 billion. And for sure, we are not going to stop there. So we are really looking at, we've already identified 2 other countries, frontier economies that fit the criteria that we're looking for, with which we can take this to $1 trillion total GDP that we will service, closer to 500 million plus people, who we will be able to touch. So that's really the growth story. As I said, taking 10x from Sri Lanka's GDP and servicing 20x our population, and then all the opportunities that presents. Then the scalability and the ability to take cutting edge investment banking solutions to the retail market, being able to give ordinary citizens access to the same type of wealth management or brokerage services that ultra high net worth individuals enjoy, democratizing capital markets, and really making, improving access. With our digital platform, it doesn't matter whether you live in Colombo or Batiklo or Dhaka or Chittagong or Sylhet, or in the future whether you are in Nairobi or Mombasa. You will be able to access these capital markets and access the best products and the best solutions out there in the market, just through your digital platform. And then it's about our people. I think you've seen all of this. I'm not going to go into that in too much detail. I'll pass it on to Udeeshan, who is our chief strategist, who will talk to you about the valuation and the numbers, and then we'll take some questions afterwards.
Before Udeeshan takes it over, a quick announcement for those who have joined us online. If you do have any questions, just type them out in the chat box, and we'll try to take as many questions as possible towards the end of the presentation. Thank you. Udeeshan, over to you.
Thanks, Ashwin. So from an IPO perspective, we are coming in at ₹10 per share, and the total quantity offered will be 157.5 million shares, which works out to a total raising of 1.575 billion rupees, which works out to a 7.6% stake in the company. Post IPO, market capitalization will be close to 20.7 billion, which is a 20% discount to the independent valuation done by Deloitte, which was close to about 24 billion rupees. On the current numbers, current market cap, post IPO, we're looking at a price to book value of 1.07 times. So just to deep dive a little bit into the valuation of the group. So the independent valuation was conducted by Deloitte, and they have done a sum of the parts valuation to the CAL group, of which the key segments, the key 4 material, the larger segments were valued at different valuation approaches. For example, the treasuries arm, which is the primary dealing arm of the CAL group, was valued using a justified price to book value ratio, and that is because it's more financial, cash related business, and the valuation of it works as follows. So for example, Cal Treasuries, the valuation range based on a justified book value works out to about 13 to 15 billion. Keep in mind, these numbers were derived based on September 2024 numbers. Right? So at that particular point of time, whatever the net asset value was, and the justified price to book value that was worked out was 1.226 times, based on a long-term ROE of 22.5%, a cost of equity of 18.5, and a long-term GDP growth or a growth trajectory of 3%. So that's how the 1.26 times justified book value was derived. And based on the book value as at that time, the valuation of 13.5 to 15 billion valuation was used for Cal Treasuries. Looking at today, compared to our numbers that were at September, we've grown substantially. As if you look at, we released our treasuries arm, which is Cal Treasuries, which is a listed company. The quarterly financials were published today. And our current net asset value stands at close to about 14 billion. We can apply the same kind of multiple and look at what the current valuations are. But based on what Deloitte was looking at as at September, the valuation is at 13 to 15 billion. And the securities arm, which is our stock brokering unit, was valued at a discounted cash flow based valuation, an FCF valuation that was used. Currently, we are running at about combined global stock brokering footprint of with a profitability of close to about 200 to 250 million rupees, of which the long-term valuation of the FCFC was derived at about 1.7 to 1.8 billion rupees. From the third and one of the fastest growing segments and of our most cash cow business is our investments arm, which is currently managing almost 250 billion rupees in terms of AUM. This segment was also valued using a discounted cash flow basis, and based on that, the valuation derived was close to 4 billion rupees for the segment. However, if you look at the forecast given in the valuation you are looking at, I think the forecast was between about 400 million rupees in terms of bottom line, with assets under management growing at a 10% growth rate over the next 5 years. But the good thing is that the AUM that we're looking at in 3 or 4 years' time was achieved by the end of this financial year itself. We are at 250 billion already. By the end of FY25, approximate earnings works out to about 600 to 650 million rupees, higher than the 400 million that we've estimated in the valuation. Right? So we are doing way above on Cal Treasuries as well as securities as well as the investment unit. And the fourth component is Cal Partners, which is our investment banking unit. And this has also been valued using a discounted cash flow approach, using a long-term profit growth figure of somewhere close to about 100 million per annum, which the 600 to 700 million rupee valuation has been derived. And the rest of the segments, which are more holding company, financial investment based, were valued at an adjusted net asset value, and that added close to about 7 billion rupees in terms to the valuation. Taking out other adjustments, eliminations, our total valuation using figures as of September works out to about 23 to 24 billion rupees. So that's a summary in terms of the valuation that you're looking at. From a secondary valuation perspective, for example, Cal Investments, you can look at a 2% of AUM as an approximate valuation. We're running at 250 billion rupees right now. So market benchmark is about 2% of AUM, which is what we use for valuing an asset management company, particularly in frontier markets. Cal Securities, even though we've used a conservative figure of about 200 million rupees in our forecast, we have years which we do way above based on market volatility and years where average daily turnover crosses close to about 4.5 billion rupees in terms of turnover, where we have close to about 9 to 10% market share. So the the IPO is coming at a 21% discount to our valuation of about 24 billion rupees, which is how the 20.7 billion market cap has been calculated. It works out to an implied price to book multiple of 1.07 times, which is at a significant discount to industry average, not only in Sri Lanka, but also to the region, and also to the overall CSE market price to book multiple as well. Also keep in mind, some of our segments are not book value driven. For example, our asset management division is more earnings and more AUM driven rather than being a book value based company. And as at September, when Deloitte valued us, the valuation worked out to about 1.26 times. And today, as of December, this number is down to 1.07 times in terms of price to book value. Also, just to look at the valuation from a different perspective, we have our treasuries arm, which is listed on the stock exchange. And I think the rough market cap right now is about 18 billion rupees, of which Cal Holdings owns 86%. So that value would work out, if you work it on market cap basis, it works out to about 15.5 billion rupees. The total market cap post IPO Cal will be at 20.7 billion, of which another 1.5 billion will be the IPO proceeds. So the remaining 3.6 billion is what you're buying all other subsidiaries, including financial investments that they have, what you're buying the company for. And based on the earnings that we are doing right now, based on historical earnings or last year's TTM earnings, you're roughly looking at about 3.5 times that you're buying the rest of the subsidiaries for. So compared to market multiples, market at close to 10 to 11 times for companies which are earnings driven, the valuation is at a steep discount when you look at it from a market multiple perspective for Cal Treasuries. And from a dividend yield perspective, over the last 5 years, our dividend yield has averaged at about 4.8%. There are years which are even higher. For example, last year where our dividend yield went up to even close to 10%. But from a longer term perspective, the dividend yield works out to close to 4.8%. And this is a summary in terms of financial highlights. We've also given an estimate of what we may or forecast for FY25 or March 2025 will be. We are looking at a consolidated revenue of close to about 17 billion rupees and a profit after tax of 4.4 billion rupees and attributable to equity holders working out about 3.8 to 3.9 billion rupees in terms of the figure for FY25. So that's a summary in terms of earnings. So if you look at from an earnings perspective, on historical numbers, you're looking at close to about 4.5 to 5 times. But keep in mind, we operate in a volatile business where based on interest rate changes, macro changes, it's not a earnings-based company where you can take 1 year's earning and assume that it will continue into the future. It a lot depends with the macro volatility. But the good thing is that over the course of the last 5 years, our fund-based business has been grown significantly and is becoming a large part of our income, which will create that steady cash flow for the group over the next 5 years. So that's a basic summary in terms of the valuation of the group. So just to summarize, we are coming at a 21% discount to a valuation that was done at September, which worked out to about 24 billion rupees. The market cap post IPO will be about 20 billion rupees. Thank you.
Thank you, Dishan. I think with that presentation, that brings us to a close in terms of presentations from our end. But we'd be more than happy to answer any questions that the media and the press may have. We'd first answer the questions from the media and press that are physically present here, and then move on to questions that have been raised on the online forum. Let me take a question that has come online. I think this stems from the last bit of information that Udeeshan gave in terms of our performance. So I would direct this to Udeeshan. You had the best year last year as a group. Do you think it will continue? Do you have an estimate of what your recurring earnings would be?
So the best year was actually the year before, not the year ending FY25, but FY24. To be honest, our business, as I mentioned, has a lot to do with earnings volatility. We've seen about 400 to 600 basis points reduction in terms of the primary and secondary rates on government securities, which resulted in larger gain in the last 2 years. So it's not, we cannot look at a similar kind of earnings trajectory. But if you were to ask me of a recurring earnings number, I would think the more recurring figure would be somewhere close to about 3 to 4 billion rupees, but per annum. But doesn't mean that when we see an interest rate cycle where when rates are falling, our gains could be greater than that. But the number I mentioned is based on us achieving a 20% kind of ROE for the CAL Treasuries business, and the remaining companies adding a multiple on the earnings.
If I may add a little bit to that, Udeeshan's talking about in the current state as is. A lot of our fee-based businesses are growing at the moment at 20 to 30% a year, and this is our target. It's not a guarantee, but that's certainly a target in terms of how we want to grow, and that's where our ambition lies. This is not a we are not a company that's focused on 10% growth year on year. So that should give you some sense of where our future earnings should be.
Thank you, Kanishke. Another question that has come up online as well. I guess you'd be in a position to answer that. What additional investment products can individual investors expect in the future? Any offshore products or investments in gold, commodities, etc.?
Good question. No, we are governed by, for all the good reasons, stringent regulations. So we need to be very cognizant of this, and always we will offer something that follows from what our regulators allow us to do. So some of these offshore products, for example, will not come anytime soon in Sri Lanka, especially given the regulations that exist. But I think what's more exciting, and the way we are thinking about it in Sri Lanka, is the ability to participate in multiple types of issuances, where retail investors especially have historically in Sri Lanka only been exposed to the very vanilla fixed deposits or stocks, shares at the most. So really taking that a step further, giving access into government securities, into corporate debenture issuances, and also being able to fractionalize large investments and take small pieces of what was historically quite chunky investments. That will be where our focus is.
Thanks, Kanishke. Another question that has come up online is on the expansion initiatives, and the question is, the plan is to expand to several other countries as well. Have you identified what these countries are, and how do you hope to invest into these countries with capital restrictions in place in Sri Lanka?
So we've identified several. We've talked about Kenya, obviously, but beyond that, rather than talking about mentioning names of countries, we've identified criteria that make sense for us. So, for example, we are looking at countries with a GDP at least of over $100 billion a year. Ideally, we'd like something that's in the 2 to 300 or 300 plus billion range, because that gives us a certain level of scale. We are looking at countries where English is a spoken language, because that makes it easier for us to operate. Countries where the legal system is something that we are familiar with. And finally, places also that we can get to relatively easily. I mean, as something in South America may be very interesting for us, but it's a very, very long flight there. So, a place that we can get to easily. So that will be the, space that we are looking to operate in.
Thank you. another question is around the ROEs in terms of CALT. If you remove the one-off years, what would be the average ROE for Cal Treasuries B? Do you think you can still maintain this ROE with the current book you have?
So if you carve out the 2 extraordinary years out, I think the ROE will still be close to about 30%. A 20% plus ROE is 20-25% kind of ROE is definitely possible. Looking at the long-term volatility and the interest rate cycle that we've seen in the past and what we can expect in the future, there's always a cycle, and we have good years which kind of cover up for ordinary years. But also keep in mind that compared to 5-6 years ago, where there's no VAT on financial services and so on, now you have more taxation and your volatility on interest rates is relatively lower. So, which means that we still will get close to 20-25% in terms of an ROE, which is very possible in the current scenario.
Thank you, Dishan. We do have a couple more questions on that have come up on the online platform, but these questions are highly technical in nature, and I therefore ask you to join our analyst forum, which is scheduled on the 28th, where we would be discussing most of the technical matters in detail. But just before we wind up today's proceedings, a couple of questions in terms of the application process and so far, which I'd like to address. There's a question on what would the online application process be. You can apply for the IPO online using the CDS mobile app or the CDS portal. You can visit the CAL website, which would give you further information on how to apply. Also allow you to download the prospectus if needed. And there is a question on allotments as well. Could you please explain the 10% allocation for unit holders? So there was an allotment methodology. There is an allotment methodology that we've adopted, which is in line with the CSE requirements. So there is a 10% allocation for unit trust holders. Similarly, there is a 40% allocation for retail holders and a 10% allocation for employees. So those would be the allocations that would go into the individual investor categories. Further details on that is available on the prospectus. And if there are no further questions from the media and press that's here with us physically, we would like to wind up today's proceedings. Once again, we'd like to thank all of you who joined us here physically, and for those who joined us through the online portal. Thank you, and we hope to have a good IPO.